What's the advice to investors this morning? Do I keep selling or do I start buying?
It depends on your time frame.
I knew you'd say that. Say my time frame's between now and the end of today.
Between now and the end of the day, I simply couldn't make that call. I mean,
Okay.
you can. Who knows what's going to come out, particularly with...
Are you surprised to see the selling?
In a way, no. I mean, I think when I was on previously, we were talking about the fact that when you came into the year, there was a sense that everything was fine. GDP growth again, earnings growth again, valuation not demanding. But at the same time, you could see that there was a certain amount of complacency, and you could see that in the put-call ratio and also in investor optimism. So that initial setback that we had in January, February was not a surprise, partly because if the S&P had carried on accelerating at the rate that it was going up in the first 3 weeks of the year, it would have been up 154% in 2018, and that wasn't going to happen. So some kind of correction was on the cards. What was interesting about that first correction was that there was very little rotation in the market. So the outperforming cyclical sectors continue to outperform, defences continue to underperform. This, with the news about trade, where, you know, we're not quite sure where we're heading, feels like a little bit more of a risk-off move. So what you're seeing in bond markets is some flattening of curves, and that seems to be leading to a small amount of rotation in stock markets, with cyclicals coming off the boil and defences starting to come back into focus from a relative point of view.
So, I'd be surprised actually how well performing the govie market has been. There's a lot of volatility in equities, but govies look quite stable. What do I do in the credit markets? Do I go up the quality scale? How do I play this? As volatility starts to come in, as I start to get a little bit more nervous, how do I reposition?
Well, I think you stay calm.
Excellent. That's good first advice.
I wouldn't be looking to make major portfolio shifts at this stage. I was talking actually to one of our traders this morning, and one of his counterparts said to him, I'll sell you anything, including what I don't own. And when we're in that kind of market, you don't really want to be sort of actively participating. When you look at, for example, as well, I was talking to another trader on EM Asian credit, there was really no bid at all. It was a very heavy market. I do actually think that in this situation where we're getting a lot of selling of sort of growth-sensitive risk assets, if you still believe in the underlying sort of investment thesis of global growth...
If there...
Yeah, we should come to that a little bit in that thesis. Then actually, you know, there's going to be opportunities actually to add risk. Now, I wouldn't be adding risk right now because I think there's still some positions that need to be flushed. I think there's still some sort of weak hands holding some risk which maybe they shouldn't really be holding. And it's been painful out there because if you think of the three most crowded trades, I think it's been short dollar. That one hasn't yet dropped. It's been short US rates and it's been long fangs. And
yeah, that last has definitely moved.
Yeah.
Let's get to New York now, to our Bloomberg cross-asset reporter. She is Sarah Ponczek. Sarah, I've been following our blog with great interest because, you know, it seems that the market is quite indiscriminatory in what it's selling off. And there was a good point earlier this morning that actually, for example, countries in Southeast Asia have more of a domestic growth focus, but also benefit from strong local consumer bases, unlike their North Asian neighbors. So actually, it could be a haven. Have the markets really figured out where the real havens are, or are they just selling indiscriminately?
I think the markets are still trying to figure out where those real havens are actually going to be. We still need to get a little bit more details. But when you think about the S&P 500, 43% of its sales actually come from foreign countries. When you look at the Russell 2000, that's a lesser 20%. So, I mean, you can see the difference there. But you do see people flocking to the yen. You see people flocking to treasuries as a bid to a risk-off trade. They're looking for those safe havens. But I think as we get more details, as time goes on, we're really going to see investors figuring out exactly where those safe havens are.
Sarah, what needs to happen for a lot of these assets to trade even lower? Could it just be general sentiment, or does there need to be another catalyst?
So to trade even lower, I'm going to go to a technical sign. So when I spoke to one of the technical analysts, who I usually do, he said that, you know, if we break below the 100-day moving average with a lot of force, that could mean that no matter, even if we get even more news, we could continue lower on the day. So because we broke below the 100-day moving average, we're going to open earlier today. We'll see what happens, but it's very possible that we can retest those February lows and even get towards that 200-day moving average.
Stephen, talk to me about sector rotation. It's interesting. So people are flooding to the yen, they're flooding to the Treasury market, they're flooding to stocks like sort of BAT this morning as they maybe look for some safety to try and understand how to reposition. That's kind of what they're doing. So talk to me about where I go from a sector point of view. Do I sell German autos and buy what? Kind of how do I reposition from a sector story?
Well, I think, you know, when you say flooding to, the defensive sectors are outperforming a falling market. So
yep.
I'm not necessarily sure that there's real money actually piling into
it's a relative trade, fair enough.
So it's a relative trade. The second thing is that, you know, as I said earlier, I think you have to pay attention to what's going on in the bond market, because you've had curve steepening for the last 18 months and now you're having a modest curve flattening, and I think that sector rotation is responding to that. But the third thing you have to think about is the earnings story. And particularly the direction of the dollar. So just on the earnings story first, it's in the cyclicals and financials that you're seeing better growth this year expected. And if we assume that the current ructions over trade don't actually impede that growth story, then you would expect that earnings growth to be delivered. In the medium term, I think people need to think about the dollar. David was mentioning that you know, people have been on that short dollar trade. At the moment, basically, it's not working because it's just stalled. Dollar's not weakening dramatically, and it's not strengthening dramatically, but people need it to weaken in order for that trade to work. If you had a reversal in that, then you should really pay attention, because a lot of the momentum trades in the last 18 months have been driven by a weaker dollar. And if that starts to turn around, then that would drive a bigger sector rotation.
Okay, Hillary Clark did a fantastic chart, which I'm going to show but not ask you about it right now, David. But this is basically, you can see the domestic appeal, the Russell 2000 outperforming the S&P 500. But, David, we do also have a viewer question. And basically, this viewer who's been watching us this morning says, shouldn't Europe negotiate with China and find a way to overcome together these sanctions instead of trying to convince the U.S. basically not to impose these tariffs because they're playing at it alone? And could we actually see global trade being rethought?
I think it's a good question, because the issues that the US have raised around intellectual property theft and the behaviour of China in global trade actually have merit and would be shared in a number of other major economies, including Europe. I think the problem for Europeans is that they're doing it bilaterally, not within the multilateral framework.